guys, welcome back to my channel. Don't forget to like, share, comment, and subscribe. Turkey's lira closed out its strongest week on record on Friday, spiking more than 50% with the support of billions of dollars of setback market interventions and a promise that the government will cover FX losses on current deposits. Turks did not sell dollars on Monday and Tuesday, according to official data that suggested they had played little role in the sharpest market gains. The state interventions, meanwhile, cost the central bank more than $8 billion this week, according to traders' calculations. The currency gained for 5 straight days and touched mid-November levels. At 5, it stood at 10.7 versus the dollar at 1919 GMT. The lira had plunged on Monday to an all-time low of 18.4 per dollar after a months-long slide due to unorthodox interest rate cuts and fears of an inflationary spiral. But late on Monday, President Tayyip Erdogan unveiled a scheme in which the Treasury and Central Bank would reimburse loss on converted lira deposits against foreign currencies, sparking the currency biggest intraday rally ever. In an interview with broadcaster Al Haber, Erdogan said Turks showed confidence in the local currency and lira deposits increased by 23.8 billion lira after the anti-dollarization plan announcement. But data from BWDK banking watchdog showed that after heavy accumulation of dollar last week, Turkey's individual depositors held 163.7 billion dollars of hard currencies on Tuesday, virtually unchanged from Monday and Friday, when the total was 163.8 billion. Instead, the lira got a big boost from what traders and economists call backdoor dollar sales by state banks, supported by the central bank. In the first 3 days of this week alone, the central bank's net foreign reserves dropped by $8.5 billion, according to the calculations of three bankers who spoke to Reuters. The drop totaled nearly $18 billion in December, they said. We suspect positioning and stealth intervention will continue to dominate the price action, said Winton, global head of currency strategy at Brown Brothers Harriman. Even if the lira stabilizes, there are still strong inflationary impulses in the economy that will continue to erode the value of any local currency holdings. After Reuters reported progress in talks over possible currency swap lines with Azerbaijan and the United Arab Emirates, Turkey's central bank governor Sahap Kapçıoğlu said the bank would sign two currency swap deals within 2 weeks, using all instruments. Citing for sources familiar with the operations, including a senior Turkish official, Reuters reported on Thursday that state banks heavily sold dollars earlier this week on the heels of Erdogan's announcement. The state banks have not commented on that issue. The central bank, which was not immediately available for comment, had announced dollar selling market interventions earlier this month but not this week. Finance Minister Nureddin Nebati, discussing inflation on broadcaster NTV on Thursday, said Turkey is using all the instruments at its disposal in a positive way. As of December 17, the central bank's net foreign reserve tumbled to $12.2 billion from $21.2 billion a week earlier, the levels last hit in May in a reflection to the of the interventions. Okay, that's maybe it for me. Thank you for watching. Don't forget to like, share, comment, and subscribe. See you.